Welcome aboard. Thank you very much for joining us for this version of Sunday Market Update. My name is Geoff Pyne and I'm a trader with the Actions to Wealth team who bring you Sunday Market Update each and every Sunday. It's my turn and a few things to talk about, but really the elephant is still in the room. How are you handling Trump 2.0, everyone? Not so great or having a wonderful time? There'll be people on the right side and there'll be people on the wrong side. I think the hardest challenge at the moment with Trump 2.0, as it was with Trump 1.0, is timing everything and getting to know when Trump's going to talk. I'm not sure how exactly because it just happens. And I think last time in 2016 to 2020, it was all about X, or was it Twitter back then? Probably it was. Now he's got his own show. Has he what? He's got his own show, all right. And he's really having fun with the markets. I'll get that out. Conspiracy theories running wild about his tariff introduction. Well, he warned us. And did he warn his mates when it was going to happen? Maybe he did. Um, does he do that the night before he makes announcements? Maybe he does. Our challenge, of course, is to negotiate those tweets or whatever they are these days, and of course the announcements that he makes, the executive orders that he makes, willy-nilly. We're in new territory, guys. We don't know what he's going to say. We don't know when he's going to say it, and we actually don't know the repercussions. So it's a challenge. It's a real challenge. And today I'm just going to try and give you an idea of how I'm handling that, and maybe give you some ideas around how you might think about handling that if you're not handling it too well at the moment. It's difficult, I've got to say, but my way of dealing with it has been with a big picture outlook. And I think the last two times I've been in Sunday Market Update, I've indicated to you guys the big picture as I see it and what happened when Trump got elected in 2016 versus what's happening now when he got elected in 2024. And I take a lot of confidence out of that particular scenario because in the main, what I'm seeing has happened in 2016 or did happen in 2016 is repeating itself in 2024. But like I said, there are challenges abounding with all of the announcements that he does make. And I'm going to show you, he caught me again on Friday, as a matter of fact, and I'll just give you an indication of how that panned out. Hopefully, I'll be showing you my Euro Yen screen very shortly. And that should be it. And this is a classic. This is a case in point. Just let me make sure. Yes, you should be able to see my screen, which is Euro versus the Yen. It's a 4-hour chart. And I was trading Euro Yen long on Friday. Most of you guys probably don't know how I trade, but essentially I'm looking for breaks or false breaks of support and resistance areas. Been a beautiful uptrend here on the 4-hour chart and coming off the support of that 4-hour cycle, if you like, cyclicity, whatever you want to call it. And I got this lovely little false break of my support trend line here. I won't go through what constitutes a false break for me, but essentially it's a break turned sour. And I've got this beautiful signal with this bar here and entered long at that point. Well, I set my order long at that point. And of course, unbeknownst to me, at some stage during the US session, Donald Trump comes out and makes an announcement that the Eurozone is going to be penalised or tariffed or whatever you want to call it by some magnificent degree. And of course, the euro just tanks on that announcement. And my stop loss was here. Where the heck do you put your stop loss to avoid getting trumped, as I call it? And had I put it underneath the monthly pivot, I still would have got trumped. Maybe I could have put it below this low, but then my risk to reward becomes absolutely ridiculous. So that's the challenge that we have as traders at the moment. So I got trumped. The fortunate part, I guess, is that I realised that I can get trumped and am trading at reduced risk when I'm taking these trades. What, however, I can do is go to the bigger picture and maybe get my stop losses in far distant lands. I was pretty cool with this trade. Everything was going for me. The yen, the data coming out of Japan wasn't great. The data coming out of Europe was good, and I had this beautiful false break. There's nothing I can do about that. Really, nothing I can do about it. So just move on and recognize that the risk that I was taking had to be reduced because there is the possibility that Trump can come out and say something. You know, it's interesting that had I chosen to not allow Trump to influence that trade, and by that I mean if it had been, let's say, my time in Australia, 7 a.m. in the morning, Trump's in bed, or maybe 9 a.m. in the morning, Trump's in bed. He can't say any much. Well, I don't know if he's in bed or not, but maybe he's in bed with, no, I won't go there. I don't know if he's in bed or not, but chances are he is, and he can't say anything. So maybe there's the way to get around the Trump 2.0 is to trade when he's asleep. So you don't, well, certainly on the smaller time frames, so you don't get caught up in the noise that he can actually create. And, you know, really, Trump's not the only game in town, of course. There are the normal things going on. You know, there's data coming out of all sorts of places. There's technical levels. There's nothing's changed apart from Trump 2.0, which is he's a disruptor. There's no question about that. And he can make a massive difference. And you know, that's where I'm focused right now because you need to accept that and try and combat it. He's not, as I said, the only game in town, but he's certainly the main event. What I want to show you, and this is probably going back in time a little bit, is something that I've been harping on since October 2024. And the reason I've been harping about it is when I knew that Trump was potentially going to be elected, I looked back and thought, what happened last time he got elected? What happened to things like the dollar, for instance, which really, you know, it's the main game, the dollar. Everything revolves around the dollar. Your gold, your S&P 500s, oil, you know, everything revolves around the dollar. It's still at this point the major currency of the world. That may change, however. At the moment, that still remains the case. Everything's valued in US dollars. So I'm sure you guys, if you've been here for some time, looking into Sunday Market Update, you would have seen me share this chart. And this chart is a depiction of the US dollar index. Now, the US dollar index is against a basket of other currencies, but it does give you an overall picture of how strong the dollar is. And here's 2016. Here's the election in 2016, right there, that line there. And the market rallied for 2 months, 2.5 months, and then it tanked. No coincidence that this was the election of Donald Trump and this was the inauguration of Donald Trump. So when Donald Trump got inaugurated in 2016, look what happened to the US dollar. It went bang, 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 bang. it retraced an inordinate amount as a result of that. Well, I won't say inordinate, it wasn't, because it can tank, it can rally, obviously. And as you can see by this chart, this is a monthly chart, and it's showing you that the US dollar is still in an uptrend based on higher highs and lows. High, 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 low, high, high. Oh, we're looking for a higher low currently. Now, if you relate, or if you take a line across what happened in 2016 when Trump got elected, rallied for 2 months into the inauguration, and then same thing in 2024, rallied for 2 months into the inauguration and is tanking at a faster rate than it did in 2016. The question here, of course, is how far does it go? Great question. Can I answer that? Well, I think I've got an idea around that. I don't know if I can answer it for sure or for certain, but I've got an idea around that. And I'm going to talk about cycles a bit during this presentation, because cycles are really, really interesting. And I'll get to that in just a tick. But the cool part here is that we've got history to evaluate, if you like. So after the inauguration of Donald Trump in 2017, we had 2, 4, 6, 8, 10, 12 months of decline in the US dollar value. So far, we've had 1, 2, 3, 4 months. We're not even there yet. 1 week to go in May. We've had 4 months of decline thus far in the dollar index. Question is, do we get 12 months of decline? I would suggest that maybe the months are relevant, certainly, but what's more relevant is probably the percentage of decline, or even the volume of decline. If I measure the volume of decline until we got a rally, it's around about 1,600 pips on the dollar index. If I measure the current decline on the dollar index, it's around about 1,000. So in my estimation, and take it for what it's worth, it's my estimation, this has got a fair way to travel yet. The issue that I've got with that is I've got support here at my ascending channel, and can it get through there? That's the issue I've got. If it does, then I think we've got a pretty decent old level down here. You can see where it's been resistance and support and support. If it can get through that level, then it takes me down to about 86, something or other, 86 and a bit. If that's the case, then how am I doing? What did I say? 1,500, 15, nearly 1,600. This would become 2,000. So it's overshooting the mark in terms of the volume, if you like. That's the wrong word. The right word won't come to me, but I'm sure you get my drift. So this area here, in my humble opinion, is crucial for the dollar. Now, how do you trade that? Well, I'll show you in a tick how I would look to trade that. But I look at these cycles and I think, well, we've seen this before, guys. And if we've seen it before, then maybe we're going to see it again. After all, well, let's talk about cycles. Does the sun come up in the morning? Yeah, well, unless it's cloudy or raining. Well, that's a cycle, isn't it? It's a 24-hour cycle. Yeah. Does it get colder in winter than it does in summer? Yeah. Well, that's a seasonal cycle, right? Let's go with bears. Do bears, actually, I've just not that long ago been to Alaska and seen the bears hunting in the river for salmon. And you learn while you're there, you know that bears hibernate in the winter. But what do they do in autumn? They eat their little cotton socks out by eating as many possible salmon as they can, or anything else, berries or whatever the case may be. Is that a cycle? Hell yes. So does the market react to elections predictably? Well, this one does. It goes up after the election and it tanks after the inauguration. So when the boss man, Donald Trump, actually gets into office and can do things like signing 100,000 executive orders in 5 seconds flat, the market doesn't like that. The market goes into a terror-stricken area and says, "Well, hang on a minute, this is not what we want to see. We want to see calmness," and he creates turbulence, and so that's why the market tanks or the US dollar tanks, and it's doing the same thing again. My point is going to be that I still think there's some room for dollar weakness short term or short to medium term. Therefore, I have a thesis to work on and can therefore turn that into maybe a trading strategy. That's the whole point, right? That's what we want to do. We want to say, okay, if the dollar is going to be weak here until it hits this level, don't I want to be involved in that? And how far have we got to go? Well, probably 250 odd pips. We can make money there, right? So that would be my focus at this very moment. I'll show you shortly how I'm dealing with that and what I continue and hope to do until we reach that level and hit a support area. But before we do that, I want to show you something that's really interesting. One of the main topics at the moment is around gold. And gold, because gold's absolutely going nuts. Is that because the world's going to hell in a handbasket? Maybe. Or is it because central banks are buying up gold like there's no tomorrow? Maybe. Is it because the world or those in the market are so terrified that we're going to hell in a handbasket that there's no other place to put their money but in gold? Because obviously history will tell you that gold is a store of wealth. Do I agree with that? Yes, I do. It's very hard to ignore that and deny that point. So let's have a look at the gold chart and see what that's showing us. If I can find the gold chart, that is. Give me 2 secs. That's not where I want to be. That's where I want to be. I drew this up earlier because I thought it was really interesting, and it ties in with the cycles, the cycles of elections. And with gold, I think it's probably a very, very good reference point as far as elections are concerned. Take away the Trump issue, take away the Trump 2.0 phenomenon, and look at this chart. This chart suggests that every second election is tradable. How so? Well, in 2000, we came off the low. It took a very long time. We came off the low in gold. It took a very long time, 6 years, in fact, before we reached a high that produced a retracement. 6 years, but 325% gain in gold. That's between the year 2000. Now, I can't remember who the president was elected in 2000, but that's not the important part. It took 6 years before that rally stopped and gave us a decent retracement. It stopped here at 325%. Then it took 9 months odd, and I know this doesn't add up to 8 years because this is give or take, right? It's just rough numbers in terms of the time, but the percentages are very, very close. So in 9 months, it took to create a low and retrace 34%. That low just happened to occur when the next election was, not the 4-year election, but the 8-year. So two terms of US government. And we found a low. And we rallied after that second, what do they call that? I nearly called it a semester. Let's call it a term in office for the President of the United States. So it took 2 terms before we got, well, just before we got a retracement, but certainly to the low, the new low off the retracement after the rally, after the election of the president. Guess what happened next? Off that low, we rallied for 2.8 years before we got a decent retracement, all right. 175% was that rally to this high. Then we retraced for 4.8 years, again, off this high this time, and we retraced 44% of the gain or of the price. Then we put in a new low. Guess when? Yep, at the new election date. Not the first one, but the second one. So we're in 8-year cycles. That's what I'm trying to point out to you. Not a 4-year cycle, but an 8-year cycle. You know, bears going to sleep, sun coming up, all that sort of stuff. Everything works in cycles. So this one is still the same. We got a low on the election. In other words, the market rallied after the election. New president. Guess who that new president was? Donald Trump, correct. Rallied for 4 years, plus or minus, you know, forget the exact numbers on the years and days and months, but it rallied 83% before it hit this double top. Now, I've got a story about that double top that I can tell you. When I saw that double top, I was a seller of gold. What I didn't get on the monthly chart was a confirmation that that was the top. Pardon me. So I didn't make too much money out of that. Then I got a triple top. And I thought, for all the world, gold is going to tank for sure. Look at that triple top. You couldn't argue with that. And again, on daily charts, it was okay to trade, but on this bigger picture, it never gave us a lower high. And then we got the breakout and another rally, which took another 4 years, 4 years plus 4 years. We've hit an 8-year period, which just happens to be 2 terms in office for the US president. And guess what happened next? We only retraced 7.5% in a 3-month period. We've just lived through that, right? We just lived through that 3-month, well, there's 2 months in between there, right? But from the high to the low is about 3 months. And we only retraced 7.5%. And since that time, we have gone nuts with gold. Gold has rallied 37% in the last, well, this year, right? Since, guess what? Donald Trump's inauguration. Retraced into that and rallied hard off there. The question mark up here that I've got is, what happens next? Well, if you're thinking cycles, think about these things. 6 years, 325%. 2.8 years, 175%. These are the rallies. 4 years, 83% up to here. And then another 4 years, 73% up to here. 5 months, 37%. So exactly half the value of the last rally, which took 4 years, and we've seen that happen in less than half a year. What's that telling me? It's telling me 2 things. It's telling me that gold is overbought to billio from a technical point of view. But it's also telling me that these rallies, 325%, 175%, 83%, 73%, has still got some way to go. These are big rallies. Once it takes off, it takes off. So I'm expecting that we have not seen the end of gold rally. What I am suspecting is that there'll be an opportunity to trade the next leg of that gold rally. And buying the dips seems to be a very, very interesting way to go. So that is my analysis, if you like, of where we are with gold at the moment. Am I expecting retracement? Yes. Am I expecting that it will be a reversal? Not yet. Take with that as you will. The other conclusion, I suppose, that you could come to is that if we're still here in 7.5 years' time, we can buy it because every second change of president results in a low. There you go. You got 7.5 years up your sleeve, guys. Relax. Okay, I want to go back to, I suppose, where I started and where I keep going back to, because to me it's like the nose on my face. I know it's not that good a nose, but it's a nose. And what I see very, very clearly still is the dollar index has room to go down. It may rally its socks off for whatever reason. I don't know what Trump can do to do that. But technically, again, Trump inauguration, dollar sells off. Trump inauguration, dollar sells off. So I'm anticipating that the dollar will continue to sell off until such times as it reaches support. Then there's a change of game, because we can look at that support maybe to give us a rally, maybe come down to here ultimately. Maybe the dollar reverses, but trading it down to that support seems to be, to me, the best way to travel. How do I do that? Well, my old mate, the euro versus the dollar is probably the easiest conveyance of that, because it's an upside down version of the dollar index, right? So what do we see on the euro versus the dollar? It's the same thing in reverse. So it's an upside down version of the dollar index. So what do I see? Well, I see euro dollar has broken out of this range here. I see that it's coming off the bottom of the channel, similar to the dollar coming off the top, and it's putting in a massive rally at this point over the last 3 months. Paused a little bit, came off its high, obviously, towards the end of last month, but currently fighting to get back to that high during the current month, which has got, 5 days to go. So I see the euro here before I have to do anything in terms of, okay, pause, don't buy the euro versus the dollar anymore, because we're at a resistance level. So that's exactly what I plan to do. There are other things, of course, that you could weigh versus the dollar. Interestingly, and one thing I didn't mention, it's been a lot of toing and froing around elections at the moment. We saw in Canada that the favourite to retain government in their election, or the favourite to win government in the election in Canada, was defeated. The favourite in Australia to win government was defeated, and very, very markedly defeated. And this has happened in 3 or 4 different jurisdictions since the Trump tariffs were introduced. They have changed, in my opinion, and what I've witnessed and what I've heard and what I've gleaned from other commentators, is that those governments would not be in power now had Trump not chosen to go through with these threats of all these tariffs. Very interesting. But again, that's how powerful the man is. But it doesn't change anything in terms of technicals. And in my world, technicals will go to a point until something else changes. Those changes are, as I pointed out in that euro yen trade that I took and got trumped on, are still worth looking at, because the disruptor Trump may disrupt the market in a short term, but the market, in my humble opinion, will go where the market was going in any case. And if I look at this chart, then the euro is going to here in my world. May take some time, but that's where it's going in my world. And like I said, you can look at other things. Oil's interesting. If we look at oil, going back to the election in 2016, when Trump was elected, oil rallied for 1, 2, 3 months before it retraced. 1, 2, 3, 4, 5 months. We're now in 1, 2, 3, 4 months of retracement after that rally post the Trump election and inauguration. We're now in the fourth month. Does that mean we've got another month to go before oil actually rallies again? That looks like a decent level to me. So if oil can reach there by the end of June, then I may well become a buyer of oil. That would make sense to me because that's exactly what happened last time, and it rallied quite substantially. So there are things, in my humble opinion, that you can look at. I'll be looking at the euro because I think the euro versus the dollar is a true upside down version of the dollar index. I don't think I can add to that too much. I think it's big picture stuff. And yes, Trump will disrupt things on a smaller time frame, but I don't think ultimately the technicals will change that much on the big picture. Guys, that kind of brings me to the end of the session. Thank you for joining me. I won't be here next week, but somebody else will, doing Sunday Market Update. Hope you got something out of that, at least food for thought, if not something that you can trade. Trade well, and we look forward very much to catching up with you in the near future. Thank you for your thank yous, guys. It's been my pleasure. Thank you to Sam for looking after me as always.